Hey, what's up, my friend? So in today's episode, right, we'll be discussing this, right? When should you not buy into support? Right? Here's the thing, right? When traders trade the markets, they look for support, resistance. Oh, Rayner, it's time to buy at support. Oh, it's time to sell at resistance. I get it, right? Support and resistance, they are areas of value on your chart. But at the same time, there are times, right? Plentiful of times, right, when you shouldn't be buying into support because that is a low probability trade. So what are these scenarios, right, that you should avoid buying into support? So let's break them down. Scenario number one, when you notice a series of lower highs into support, that's a kind of like a red flag, a signal to you that you want to hold up, right, and stop buying into support. Why is that? And the reason is simple. When you notice a series of lower highs, otherwise known as a descending triangle, it's telling you that the sellers, right, they are in control. They are able, right, to push the price consistently lower, lower, and lower. Whereas the buyers, they feel, very depressed, right? They can't seem to push the price up higher. Because if you think about this, right, when a descending triangle is formed, when a lower highs is formed, the buyers have difficulty breaking above the previous swing high. That's why you get a series of lower high, lower high, lower high. It tells you that the buyers, right, they are being pushed to a corner, and the sellers, they are in charge, taking charge. So when you see a series of lower highs into support, that is a sign of weakness, and you want to, think twice, right, about buying into support. Okay, because if you ask me, right, more than 50% of the time, right, the price is likely to break down below support. Number two, when should you not buy into support, right? Scenario number two is when the higher time frame is in a downtrend. So let's say, for example, previous episode we talked about multiple time frame cheat sheet. So let's say you are entering on the daily time frame, right? You want to buy at support, but on the weekly time frame, that market is in a downtrend. So I would say that it's not that you can't buy support, right? But bear in mind that you are trading against the higher time frame trend, and the higher time frame trend, right, they carry more weight compared to a lower time frame trend, right? Because those trends, they last longer. So if you ask me, if you want to buy into support, right, which is against the higher time frame downtrend, you want to bear in mind that that area of support is likely to break and the longer term downtrend is likely to continue. Of course, it's not always, right, but more than 50% of the time, I would say, again, the higher time frame trend, right, will carry more weight, and that trend is likely to resume compared to a lower time frame trend that reverse, right, the higher time frame trend. Does it make sense? Okay, so bear in mind, right, where you are in the grand scheme of things, right, when you are looking to buy into support, right? Look at the higher time frame trend. Are you trading in the direction of it or against it? As much as possible, you want to be trading in the direction of the higher time frame trend. Number three, scenario number three, right, you don't want to be buying into support, right, when the price has tested support too many times within a short period of time. Why is that? And the reason is simple. When the more times, right, the price tests support within a short period of time, the weaker it becomes. It's kind of like a variation of the descending triangle example I shared earlier, but this one is slightly different. So I want you to think of this like, this way, right? Imagine that there's a wooden door in front of you, and in your hands, right, there's a iron sledgehammer. Now you take that hammer and you smash the door many times, right, within 1 minute. Let me ask you, what's going to happen? I'm guessing that that wooden door is going to break, it's going to collapse. And it's the same thing as, support, right, being tested multiple times, many times within a short period of time. Because the more times that is being tested, right, the weaker it becomes. Because the orders, right, the buy orders, right, at support, right, gets sucked up, gets used up. And when there's no more buy orders left, right, meaning there's no one left to buy, what's going to happen? Chances are support will break. So pay attention as well, right, when support is being tested way too many times, especially within a short period of time, because chances are, again, support will break. And finally, right, the fourth scenario is, when shouldn't you buy into support is when your risk to reward doesn't make sense. So I get it, you want to buy at support, you want to sell at resistance, but you want to measure, right, how much are you risking, right, to your potential profit. So let's say you buy at support. Okay, the market rallies higher above support, you get an entry trigger to go long, and you decide that, hey, your stop loss is about 200 pips, for example. Then you look at your chart and you realize, shortly after you buy support, right, the market is coming into resistance, and that's about, let's say, 100 pips away. So if you look at the math, right, you are risking 200 pips, and shortly after 100 pips, the price will come into resistance, and at that point, right, there's a good chance that the market could reverse from there. So let's say you set your target profit just before resistance, about 100 pips. So you're risking 200 pips to make 100 pips. So from a risk to reward standpoint, is it justified? Of course, this is something that depends from trader to trader. Some of them, are comfortable, risking $1 to make 50 cents. But for me personally, not quite my style. So when you trade support, when you buy at support, you want to ask yourself, right, is the risk to reward justified, right? How much are you risking against how much can you potentially make, right? Or rather, how far away is your target profit, right, before the first so-called obstacle comes in your way. Okay, so this is something again for you to consider. So with that said, right, let's do a quick recap, right, to when you shouldn't buy into support. Number one, right, when you see a series of lower highs into support. Number two, when the higher time frame is in a downtrend. Number three, when support is tested too many times within a short period of time. And number four, when your risk to reward isn't justified. Okay, so with that said, I wish you good luck and good trading. I will talk to you soon.